Hi, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. Hey, Jim, I appreciate that message. Thank you very much for that. All right. Well, welcome everyone. Welcome, welcome, welcome. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever adding a trade, a setup, an indicator, anything to your system. All right. Let's see. Ta-da! Here we go. Open it up. There we go. That's a little better. Okay. Here's our agenda for today. We'll go through our follow us page, today's trades, economic reports. We'll go through market review, upcoming trainings, the weekly topic, and your stock review, where you're going to drop in your candidates that you want me to take a look at. So as we get started out here, here's our follow us page, folks. You know, Sean and I shoot a tremendous amount of content each and every week for your consumption. Make sure that you're grabbing it, whether it's our podcast, it's our YouTube channel, it's our 2 different TikTok channels, and the likes, right? So keep up to date with all of that. Today's trades. Okay, what trades did you get off today? Today, Thursday, Friday, and the end of the week. Maybe you opened it on Thursday or Friday, closed it today. What trades did you do? Drop them in, funded, non-funded? It doesn't matter. Win, lose, or draw? It doesn't matter. We're going to assume everything is non-funded, and this is really more of an accountability check for you, right? Throwing it out to the world and putting it out there. So Brenda put in Wednesday, 11.5% on SPY. Great job on SPY. I love it. Absolutely love it. Let's see. Trip said, I had 3 scalps this morning, all puts on IWM. All puts, IWM 55.4%, AMD 26.8%, QQQ 138%. And I got in late on that one. Awesome morning. Good job, Trip. I only got 1 trade off today. That was all I did. I mean, Monday's a crazy day period, but that's that inner circle room, folks, that our our highest mastermind is in. So let's see. Andre said Friday 125% on SPY puts. Nice, very nice. There you go. Excellent. So let me do this. Let me bring up for your pleasure. Let me bring this over. So this is power option plays. And I guess I should maybe put a little box around that sucker so you see a little bit better. Outside border. Okay, do the same thing down here. Outside border. All right. So just to give you an understanding of where, what the stocks were. So from this week, from this last week, so that would be from the 17th to the 21st, right? So 19 was 18 and 19 were the only dates we got anything off. Okay. And today I did not check. This is not a final number yet. I did not check what we closed out on Friday in pop. So that's not added to this yet. I'll do that tonight in pop and I'll adjust the number. But right now, for 2 days of last week, one contract only, we're up $253.50. The previous week, we're up $4,700, $4,777.50. And again, we're talking about for a 1 full week of time with one contract only. If we look at the full contracts, meaning not a single contract, but whether we do our standard contracts, we do their 4s and 10s. I gotta go back and grab the borders. Okay. So you could see that for this week, same thing. It's 18 and 19 only. We didn't get the last day in there. Friday's not in there. We're up $2,340. The previous week, we were up $31,746, right? On 4 and 10 contract trades. All based on the risk and the price of the stock and a couple of other factors in there. So overall, not too shabby on some of our recent trades. Today, let's see, Coinbase was today. Right? So if we look at Coinbase, it opened up about where it closed, a little bit higher. Bring it a little more. A little bit higher, and then ran up tiny and then failed. The question is, what did the failure look like? right? So here's our 5-minute candle for today, right? So, you know what, we can bring that in a bit though. So the 5-minute candle, we opened, ran up, and just dropped, right? So let's go look at, this is Home Depot. Sorry, why did that not put over? I did have Coinbase. No, I didn't. I had Home. Why did I not have Coinbase on there? Okay, sorry. I thought it was on Coinbase. It showed Home Depot. I'm not sure. But moved up a little bit, ran higher, failed, which is the same pattern. So we go over to the 5-minute candle on Coinbase, and here's the run up. It gapped up, ran higher, failed. It closed right there. So support is at 236.92. We'll call it 237. We closed on this candle at 235.66. So we're $1.50 away, basically. We stretched back up and we failed. And on that fail, we're able to take that. Why would I be muted? Is that better? Can y'all hear me now? Okay. I didn't do nothing. I see a message. The host would like to unmute you. Crazy. Not sure where I left off, guys, but it closed here, retested, failed. It's about a $6 move on the stock. It's about a $4.50 to $5 move on the option. So a little bit bigger spread this morning. So not that bad, right? And if you did just one contract, you know, you got a $5 move, call it a $4 move with a 70 delta. That's just shy of $3. And that's not accounting for any gamma and, you know, price change inside the option as it moved in your direction, you know, for the gamma and the delta change. So again, Monday's a crazy day for me, just with the week getting started, everybody needing help, making sure we're all the trains are on the track and running properly. So I don't get to trade as much as I'd like to on Mondays, but overall not too shabby. The power option plays stuff keeps me pretty busy, so I'm okay with that. There we go back to daily. Excellent. Okay, let's go back into our presentation. We are economic reports. All right, let's go take a look at what in the world is happening. What do we got for economic reports? Forex Factory is where I'm going to go. You can use any place that you like. That's fine. Right now, I just have the U.S. Open. So President Trump speaks tentative, right? So this is becoming they should put this like on every day, because he's pretty much out there on a day-to-day basis. We're hearing stuff. But could it move the market? Without a doubt. You just don't know when. That's the only bad thing about it. There's nothing scheduled, timed, and so forth, right? So let's see. Tuesday we have at 9 o'clock. They're all orange, so they're okay. Nothing great. This is a pre-market report, right? And these two both come out when the market's open. Also orange, which is Richmond Manufacturing Index and consumer confidence. They're okay. New home sales. You know, it is orange, but here's the thing. We're starting to hear more of properties becoming available, less sales taking place. A lot of the sale right now has to come from attrition, where I don't want to move because I'm paying 3% on my mortgage interest rate. And if I move, I'm going to pay 7% on my interest rate. But my job is telling me I don't have a choice, move or go find a new job. So I'm moving to another state, another town, whatever. And I have to buy a new house. That's the attrition. That's what we're seeing that happen. But if you follow along with some of the real estate news, you know, if you look at a map today versus a month ago of DC real estate for sale, DC, Virginia area, it's a sea of red with all the houses up for sale, with the potential of job loss, trying to get ahead of the market and so forth, right? You get an offer and you don't want it, you just say, I'm changed my mind, I'm not selling anymore. Florida is having some problems as well, where because of, again, condo laws and so many things, that insurance. I mean, I am in a non-flood zone in Florida. The home we own in Florida is in a non-flood zone. What does that mean? I'm in the middle of the state. If the ocean gets to me, Florida's gone. Disney ain't got to worry about, you know, is who they're paying for that week. There's no more Disney left, right? It's gone if the water gets to me. And insurance is off the chart. Insane what they charge for insurance right now in Florida. So there's so many costs there. More people moving out of Florida is what some of the reports are saying. You're going to see some of this hit over the next couple of weeks into the market. But real estate is important. So new home sales, yeah. Now, what do the new home sales companies have that the average realtor doesn't? They've got incentives, right? They'll finance on their own. They'll throw in an extra $30,000 upgrade. They can do all of that with a new home sale, which you can't do with when you're buying a used home, right? Or we don't like the word used anymore, right? So it's previously used, right? Crude oil, not too concerned with that. G20 starts Wednesday, not tomorrow. Wednesday it starts. So I don't think we'll hear anything out of it, but it is there. GDP and unemployment claims are both coming up on Thursday. Here's the thing, Fed right now, and one of our topics over the next couple of weeks, we're going to talk about what's happening with the market, where the concerns are that some people out there are concerned with, including some people within my own circle of the traders that I associate with, in my own circle, of what's going on in the economy and where we're looking at. And if you follow some of these, it's bleak. It doesn't look well. I heard one analyst today on CNBC come out and say, "Yep, we were planning on 2 rate cuts this year, but we're very close to changing our status on that and putting it down as 1 rate cut." Right? We need cuts. Sorry, if you go back and look at the financial analysis, if you do the work and you look at rate hikes, we've never had a rate hike as fast as we did with the 4.88% increase, I think it was. We've never seen anything like this in our history, that short of a period of time. And when rate hikes stop, that is when recessions and the likes start to step in, right? Previously occupied homes, there you go. That's when some of those things start to kick in, right? To start showing or rearing their ugly head, is around that. And that's where we're at now. We had the big hike. We said, oh, rate drop time. And then we went, yeah, kidding. Sorry. Unemployment claims, I think you'll start to see some of that coming up. Washington, D.C. isn't going to have a major effect on that yet. If you looked at the D.C. area, you'll definitely see some. But so many of those people are around the world, literally, not just U.S., the home-based workers. I don't know how much it's going to have an effect on, overall on it as far as the number goes. But I think you are going to start seeing unemployment start to kick up. There's more technology kicking in, more companies announcing weekly that they're getting into more tech and less labor-based wherever they can. And it's understandable. I feel for anybody that lives in California with what the costs are there, but $20 an hour to work in a McDonald's, that's rough if I'm a McDonald's owner, right? Because whether you realize it or not, I still got to pass that cost on. So the $8 Big Mac that you were paying for is now $13, right? Or $9, whatever, it's going up. Everything has got to go up because of that, based on that. So what do? They have one McDonald's now that I heard in California that is 100% robotic. There's nobody working in the store. Everything from taking your money, taking your order, delivering your food, open the window up, it comes out to the car on a conveyor belt, waits, you pick it up, bring it. I mean, it's just awesome, right? Technology. But so we are going to see some of that kick in. So unemployment claims, again, they're pre-market. A couple of orange reports, durable goods, GDP, it's all okay, right? Pending home sales, again, it goes back to the new home sales, right? How does that data meet out? The G20 meeting, core PCE, which is the price index. That's a big one, but it's at 8:30 on Friday. 9:45, Chicago Purchasing Managers Index. Guys, purchasing managers have a lot of say. What the we lived and died. When I was in manufacturing, we lived and died on purchasing manager of our individual singular company. The company that I worked for got bought out by a publicly traded company called Masco Corp. I think it's MAS is the ticker symbol. And every purchasing manager across the globe for that company, which was Craft Made Kitchen Cabinets, Delta Faucets, a slew of automotive components and parts were made there. We made steel doors, fire doors, and the likes. Elevator, cabs, office, not furniture, partitions, right? So every purchasing manager was relied on very heavily. And we did when we were a privately owned company. We relied very heavily on what the purchasing manager gave us back as what our costs were, how we saw things going, the projections going forward. Because believe it or not, in manufacturing, my belief had always been when I was running the company, we didn't make money when we sold the product. We made money when we bought the raw materials. If we could do a really good job of buying the raw materials, we could adjust our price on the end, lower it, and still make our profit margins, and play around with things because we had enough on the front end. Okay. So we've got a lot happening over the next week, but you've got to understand what this does or doesn't do for you. So if I'm looking at this right now, right, I'm saying, okay, what are going to be my concerns this week, right? Am I concerned with Trump speaking? Well, yeah, if it's in the middle of the market and he comes out and says something that's crazy, yes, right? Do I care? So Tuesday, it's all orange. I'm not really concerned with it. Wednesday, it's orange. By the way, it's not only orange on Tuesday, but it's pre-market, some of it, right? Thursday, are these big reports? They are, but unless you're trading futures, they will not affect my trading. Know this, right? Know this. So nothing here is when the market is open. But if you are going into your trade, you're getting ready to place a trade, and you do not know that one of these reports came out, you don't know that, the GDP came out or unemployment came out or the price index, right? You don't know these reports came out pre-market, albeit they could have a dramatic effect overall on your position. So you should at least look at this, write it down. One day I'll take a picture of a journal entry. Write it down. Just get a spiral notebook, right? Just go and get yourself a cheap, 25-cent, I don't know what they charge now for, probably $11, but they used to be 25-cent notebooks, right? Just go get yourself a cheap little 25-cent notebook, right? And it's a two-sided, right? Here's your spiral, right? Sorry about that. It's just a horrible looking book, but that's your notebook, right? That in the middle is the spiral, okay? On one side, on the left side, write down what's going on today. Write down economic reports. I'm just going to put ER. Write down the economic reports. Write down any news that you've heard that may concern the market. Write down earnings on this side, right? On this side, you're going to write down trades. And on my trade, I'm going to draw a line underneath it. And I'm going to put my next trade. That was supposed to be trade 2. Right? Write down the emotions you're feeling while you're in that trade. Write down every detail about the trade that you can that doesn't get you to the point of, I just spent 20 minutes documenting this one trade. I don't need that. I write down the stock price. I write down the time I took the trade. All of that is easy enough to jot down in there. I'll record the balance of it later. I'll worry about rate of return and all that stuff. But if you had some really negative emotions going into this trade, you're going to want to put that in there. You're going to want to put down what it was that you were feeling, right? If the trade is over and you realize that, I didn't follow any of my rules, write it down, right? If I've got my economic reports here, I know what's happening here. So I'll write down that unemployment's coming out today at 8:30. Market's closed. It doesn't affect you, right? You're not placing your trade till at least 9:30. And I'm talking Eastern, of course. But if the market takes a wacky move, all you look at is the market is up 20 points. The S&P is up 20 points when you go ahead to place your trade. All right, market's up. That's beautiful. Yeah, except it was up 150 before the announcement came out. So that's a whole different ball game of being up 20 points when you were up 150 versus being up 20 points when it was flat in pre-market, right? It's a huge difference. So understanding what's going on with it is important as well. All right. So economic reports, let's see. So as far as safer, so Brenda's asking what the safer AI models are. Guys, very simply, first off, you all should go over to tradinglikeaboss.com and you'll see the AI stuff that's here. Okay, it's all free. It's prompts that I wrote. This is I want to say it's a 15 20-ish page document, PDF, that you download. And it lists in there the top platform, which to me, when I say top platform, is Perplexity, right? Is the top platform. Now, if you use it in incognito, and you probably have to register a free account, we do have paid accounts for all of the major platforms. But if you register a free account with it, and you go to incognito, they do not use any of your data. Any of your data does not go into their database at all, and it disappears in 24 hours. That is the bad thing. Okay, it disappears in 24 hours. But there you go. Andrew dropped in a link there, guys. So you can just click on that link and go right over to the to Trading Like a Boss. It's in the middle row on the far right on the bottom. And it is so Perplexity is the platform I like the most because it can pull recent information where ChatGPT may say, I'm sorry, I don't have that information. If you put in there what earnings are coming out today, it's going to tell you not only the earnings coming out, but where their sources are from. Right? So big one to consider. Right. So Karen said consumer confidence numbers last 2 times have tanked the market as orange. Right. Absolutely. That's part of the problem of them. Consumer confidence, Karen, and for everybody, is a report that the Fed looks at. Right. But it's not, the problem is the Fed is not going to make adjustments to rates based on that. Their stance right now is rates are good. We're in a good place. We don't really need to make adjustments to it. We're okay. I'm not saying they don't have effect on it, Karen. What I'm saying is I tend to focus very heavily on the red, but yes, the orange can have market. There's a reason I have red and orange here because I could easily go over and add yellow, which will give me everything. Yellow is FOMC member Logan speaks, right? I don't even know what HPI is, right? Barr speaks, Barkin speaks, Barkin speaks again on Wednesday, right? FOMC Bostic speaks. If it's, a lot of FOMC members speaking, natural gas storages, right? A couple more FOMCs. So I don't look at the yellow. Sorry, I don't look at the yellow, but that doesn't mean that Barkin doesn't come out from the Fed, say something, and it tanks the market. So anything can, without a doubt. So you are right, Karen. They definitely can have some drastic effect to it. What is the best way to learn how the ERs? Sorry, Tom. Is that earnings report? If I wrote it, I don't remember what I wrote. I would have written it just because I was abbreviating. Okay. What is the best way to learn how the earnings reports affect the markets and the sectors for my trades? The funny thing is, there's a lot of variables to consider when it comes to earnings trade. I could teach a full hour just on earnings. But first thing is for me, if a company is announcing earnings and it's not happening after the market closes, if it's happening during the market or pre-market, I'm not interested in doing anything from an earnings standpoint with that company. I will only trade them if they're coming out after the market closes, right? There's an entire strategy we created in E-mini Think Tank when I ran it before Brandon came on to teach it, that we did the class was at nights, but the strategy was to be taught and used for after the market, right as the market closes and companies make their announcements of earnings. And there were a dozen or so stocks that we could trade there. But you're saying how the effects on the market and my trades. Yeah, so if you're in a trade, that could be a problem, period. If you're holding a position, and Tom, if the position is just a directional options trade, you might want to consider, do you really still want to be in that trade? Or are you going to buy some protection in case it goes against you? And going against you, by the way, you bought a call, going against you would be down, but what if it goes up? Right? And it's not a directional call, but it's covered call. Right now you get called out. So, but on covered call positions, I do love on covered call positions, the ability in an earnings season to buy a protective put. If it goes up and the stock gets taken away from me and I made more money, I'm okay with that. If the stock gaps down, I'm not. So I won't, usually the week of earnings, I won't sell a covered call. I will wait, just buy a put instead, which means cash out of pocket. I will buy a put to protect the downside if I want to hold on to that stock. And unless I really like this company or I've got a larger capital gains in there, meaning I've owned the stock for a little bit, then I'm probably not going to have it through the earnings if I don't have to. Right, there you go. Kevin said, yeah, the old NQ trade. Exactly. Kevin was in E-mini Think Tank with us way back when, as a bunch of you were. And it was how we traded the NQ, which was the E-mini for the NASDAQ. And we traded it as the announcement came out. The markets were closed on the stock, but NQ is open. And we were able to rock on that regularly. We had very specific patterns of what we look for. Yeah, Kevin said futures since you started. Yeah, he's been involved with it ever since we got started with E-minis. So economic reports, we have some. Can the orange ones move it? Without a doubt. Without a doubt. Your higher probability is always the red reports. Okay. All right. Market review. Let's go look at the S&P 500. This is an interesting one. Okay. Let me take the symbol grid down for now. Okay. All right. So we've got a good move overall in our position right on the S&P. Great run to the upside. Right. We put in the high, the lower, the high and the low, lower high, lower low, lower high, higher high. Right. And now we have not yet put in a lower low, but we're getting down close to this one here. Now I'm going to bring it in. Zoom on it. Okay. So what in the world happened here? So this right here was Thursday of last week. On Wednesday, we ran up and hit an all-time high. Closing high, all-time high, both of them on last week, right? That was on Wednesday. Thursday, we gapped down a little bit. We stretched down below the 61.16 level. We came back. Hold on a second. I don't have a 6,100 in there. Let's go put that in. No, actually, we're at thousands at this point. It's the S&P, so we just do thousands. And then Friday, we gapped down and shaved top just about tiny wick in there, and we just dropped, right? And we ran right into this blue zone, which is important. It's the 6008, right? It is, which is the -272 hesitation point, right? And then we've got the 6,000 level in the middle of that, this dotted red line, and then the 59.90 and a half, which is our ABC, our 618 of our ABC pattern that we've gotten in. So there was a lot of strength as we bounced, and the 55 moving average, I don't put a lot of credence in that as a standalone, but hey, it's one more obstacle. If the 6007, 6008 level is a 1-inch thick piece of wood, right? And then the 6,000 level is another 1-inch piece of wood, and the 59.90 is another 1-inch piece of wood. The 55 moving average is a 1/4-inch piece of wood. It's more strength, but it's not as important as the other levels are. But hey, I'll take it. If it's there, I'll take it. We gapped up today, ran up, pulled back, and we pushed down through all three of these levels. This is where fear is coming in. If you notice, ever since we put in our lowest low of our pattern, which was back here, we've not been back down below this blue zone. Here we opened in it, but we're on our way up here. I'm not worried about that. We stretched down here. We came back here in this candle here. We came back to it. We haven't been through. Today we broke through it, and with a vengeance. We broke it. I mean, we gapped down and ran. If we look at a 5-minute candle of it, let's see, where's my 5? Everything moved around. Okay. If we look at it, we gapped up and we just crushed right through it. So we had hit the low of the morning by 10:10, the 10:10 candle. That's closing price of the candle, that 10:10 a.m. candle. We hit our low, and then we kind of have bounced a little bit, recovered a little bit back from there. All right, let's go back to the daily chart. So now, if I'm sitting here today, right, I'm in position number 1 in the chair, and I'm watching, right, and we get a gap up. My first response is looking at the 5-minute chart. And once again, I have this set up on TradeStation as a standard pattern, right? So I'll just look at the S&P 500, right? I got the 1, the 5, the 30, and the daily, right? I could see the 5 and what's happening and so forth. And as I'm watching the 5-minute today, you know what? Let me do this. Let me put that back. Let me do it on Omega charts because I already have all my lines drawn. So as I'm watching this fib line here, which is the 43.37 level, we gap up and what did I say? 43.37? No, that's not right. I don't know why in the box it's giving me that. It's 60078, 6008, right? 6008. So that's up in here, right? So if I just find, I'm just going to draw a line. I'll change it over to 6008. Okay. As we move down, I'm in position number 1 in the chair. I'm sitting back, and I'm back here like this, and I'm watching at this point. And we start to move down, and we start to move down, and we start moving down, and then we close right at that 6008 candle. At that point, I'm in position number 2 in the chair. I'm sitting straight up in the chair, and I am very focused. What do I want to see? The bounce, right? Because if we did what we did on Friday, and we go back and bounce off of that same level, right, where we came down and took a small bounce, and we bounce off this level instead of breaking, life is good. I'll consider a bullish entry. We're in a neutral bias at this point, right? So I'll consider a bullish entry. But then we broke. And now everything just goes to hell in a handbasket. Traders are absolutely freaking out. The messages I got today, the phone call, one phone call, was just panic, sheer panic. Because everybody's watching that zone. There's 3 major levels there, plus the 55 moving average. They're all watching that zone very, very closely. When we broke through, I talk about it as we pierced through. And basically what happens is the bears stepped in today. They broke through all 3 of these lines, a little bit down here, and said, there you go. The door is open. Go through if you'd like to. Please, if you'd like to. We already paved a path for you. Now, it may not be today, maybe tomorrow, but the expectation is we can see that break to the downside. Now, will we? There's too many other factors happening right now around it, right? There's too many other economic reports and or governmental news that is driving some of this stuff, okay? So I don't know, yay or nay. In other words, I'm not planning on we're going down and we're going up. Are we going to go down, up, or sideways? The answer is yes, we are. We are. Without a doubt, that I will guarantee. But I'm not going to make a decision on what I'm going to do on it until it happens. If we break through the lowest level of this, that's 618, this purple line, break, retest, and fail. If we bounce here and come back up off the 6008, pull back, bounce, take the bullish entry. Right? I will take the trade based on what I see, not based on what I feel. And that in and of itself is a tremendous, tremendous, tremendous problem that traders have, is they tend to trade what they see or what they feel instead of what's going on. And then seeing is not believing, right? Because you may not be seeing the right thing. You think you are. You think you are, but you're not, because you're seeing what you want to see, right? And I'm not using this as a platform to bully anybody or bash anybody. Oh, y'all are doing this crazy stuff. You have no idea what you're doing. That's not what this is about. Because everything I talk about came from my own problems, right? Things that I have personally run into, right? So for me, I know what it is to just trade from my gut and have no clue whether it was not my head thinking about it. It was my gut. Feels like it's going to be a good trade. So let me take it. Oh, this is going to be a really good one. I'm going to put extra money in this one. Why? Well, this way you can make a home run or strike out miserably and wind up in the dirt, right? With a broken arm and I can't play anymore. Is the 59.90.58 an older fib line at the 618? Andres, you're talking about this right here? No. This right here is part of the ABC pattern off of the S&P 500 move. right? So we went, let me get my mouse out of the way. We went, A is where the fib started, B is where the fib ended, and C was the lowest pullback we had in it. Right? So that lays in this 236 line, this 618 line, and this one line. That's where those come from. Right? That 618 is a pullback. I'm still looking for that 6173 level, 6175, whatever it is. I'm still looking for that line as our upside. We got it at 6147 here with our all-time high. We got close, but we didn't quite get there yet. Right? But that level, that ABC, is, to me, crucial. Crucial. This is one of the biggest things we do. We talk about it here on a Monday, right? I'll go through what I see in the S&P and lay it all out for you. In power option plays tonight, I will do an in-depth analysis of the S&P. When we do our update again on Thursday, I do another in-depth analysis of the S&P. And there's that constant looking at what's happening in there. And of course, through POP, I want you learning how to do all of this on your own, right? Because just like here, you only hear me do this on Monday. If this is your only time of the week that you hear me talk about the S&P, this is it. You're done. Whatever happens tomorrow can totally throw my analysis out of whack. If we break tomorrow to the downside, what do we do now? Right? And that's just it. So what I'm looking at there. Well, the 59.43 would be my next downside, and it is. But how important is the 58.23 right there? The 59.23, the lowest low we had in there, right? That swing low. There's a lot happening out here right now, and especially if you look at what's going on recently in the market, we got a dang mess. Moving averages ain't moving. Right? We're up and down, up and down, up and down, up and down. Right? The moving averages, look at the 8, look at the 21. They've gone somewhat sideways. The 55, yeah, we still got some diagonal movement to it, but so what? It's a 55. It's a much longer term moving average. Right? So I'm watching, though, personally, I am watching this next fib line down here, which is 59.43. I'm watching 60.60 on the upside. Those are the two key levels that I'm looking to work off of, right? As far as my next targets. We've got a 21 moving average there. Even though the stock continues to move up, the S&P, the 8's going to continue to come down a little bit. So we could have a confluence of two moving averages and that fib line, which just each one, give each one a check mark. The fib line, the 8, the 21, you got 3 check marks there, 3 levels of strength, resistance up above head. Down on the bottom, we've got 4. You've got this line, the dotted line, this line, and the 55. You've got 4 of them on the downside. So there's a lot of strength in that area. Yep, Andre said, I agree with the 60-60. Okay. So Jim said, like an airplane pilot would do in fog, trust the instruments on what is showing them to land the plane. Same with indicators on charts. Trade from what's on the chart. The probability will work in your favor on the rules. Without a doubt. I mean, I don't have a question that is the case. None. All right. You must follow what the chart tells you. You know, so it's not me, right? And what I'm going to say here did not come from me. Okay. Is Roman in here? Let's see. Is he in here today? Let me get down there. He's not in here today. Roman says it all the time. Follow Rob's rules. Even to the point that he bought a little recording device that he would say, he spoke, follow Rob's rules, and he just pressed the button and it would say it out loud to him. He brought those devices to everybody in Mastermind Inner Circle 2 years ago when we did our Trader Super Summit live in New York. And whether it's my rules or Brandon's rules or Tony's rules or Tripp's rules or Amelia's rules, it doesn't matter whose rules it is. Whatever rule you're working with, your own rules, you've got to follow those rules. There are not exceptions to that of when it's okay not to do that. Look, I know I'm not supposed to put my hand in the flame on the stove, but what am I supposed to do? I dropped a piece of bacon in. That's friggin' bacon. I'm not going to lose that. I got to get it. Let me get my fingers in there. There's not an exception that makes it okay to stick your fingers in the fire. There's not. Okay? So that's what you're doing if you're not following those rules. Oh, Okay. NVIDIA earnings this week. Karen said that can drive things up and down. Oh, without a doubt. Without a doubt. So if you look right now, the S&P 500, I don't know the exact number today, but and we'll talk about this on another day, but the S&P 500 right now, we're about 12% earnings for the year, up 12% for the year. If you take the top 7 companies out of there, those companies are up like 90%. If you take those top 7 companies, and this is before Friday's drop, you take those top 7 companies out of there, the rest of the S&P 500, the other 493 companies are losing money as a whole. All right, so there's a lot of shaky ground, right? If any of you watched, saw the movie Home Alone, and I don't remember if it's just 1 or if it was 2, but it's two for sure, 2. When the guy fell through the hole in the floor and he lands in the basement, he stacks up an old leather suitcase and a box and a record player and whatever the heck else he found, and it's like this tiered mess that he used to climb up to get back through that hole, right? And he's standing on it, whoa, and the thing's shaking, and he's holding on, right? That's kind of what's going on right now if you look at those companies. You get all of these great moves on companies. NVIDIA is a major, major player. But NVIDIA has had some of the largest drops of every company out there. Some records of what the drops were all come from NVIDIA. Pretty split, but all come from NVIDIA. Every bit of it. Yeah, there you go, Jen. Who doesn't want to save the bacon, right? Okay, good conversation, folks. I love this. I love the back and forths. I love the comments. You can't catch me off guard, and I'm not tripping up, and I read every question. So, unless it's something really bad that is just going to be ridiculous, I will read every question that's in there. And if I don't know the answer, I don't know. If I'm wrong, I'm wrong. It's okay, right? I'm not always going to be right. Ask my wife. She'll tell you. Leave it at that. Okay. Let's go back into the presentation. Inner Circle coming up tonight at 7, and then March 3rd, which is next week, I think. Yeah, next week. Trade Watch Alerts Q&A, which is with Tony. That is on the 24th. So that's today. 8 o'clock. Mastermind Group is tomorrow, the 25th. Trading You is on the 3rd as well. 8 o'clock. Trading You. Why do we got the 3rd there? That's weird. Andrew, do me a favor. We need to check those dates. Reach out to Elisa. Something doesn't sound right there. Why would we have 2 events? Oh, wait. I'm sorry. Inner Circle is a check-in. My bad. That's check-in. It's at 7 o'clock. Okay, never mind. That's why. Power Hour Trading Coaches Playbook are on regular schedule, as is Pop Covered Call and E-Mini, regular schedule. And Cash Flow Dominance. Trips already taught one on, guys. Great training. You've got to catch this training, folks. You will not be disappointed, right? If you're looking on how to cash flow your money, Tripp's got it. He's got it figured out. So Andrew just dropped in a link for it, so you can click on that. That's what you got right here. It's just serious business, baby. He's just there, right? I mean, I saw the last the training he did. It was outstanding. So do not pass up on this. All right, weekly training topic. Rob's top trade for 2025. If we go and look at, let's go to a 5-minute candle for today. And let me put my symbol group back up. And we go and look at Coinbase. All right, for kicks and giggles. Okay. Coinbase had a really nice move down, a little bit up, and a kind of sideways move in there. That's okay, right? That's not bad. We look at Costco. We gapped down, we ran up, hit resistance again, failed, ran back up, ran back down. We're all over the place. Here's what's happening. Let me put a check mark next to Costco. Maybe I find somebody I like a little bit better. Okay. All right. Let's use this. It's not going to be as difficult to follow along with what I'm trying to get at with this. So we never came back to resistance. Pretend we did, or you waited for this support. You broke, retested, failed. You took the trade off of the 400. 389-ish is support. La-di-da-da-da. Okay. And you're moving down in here. We get this big stretch down. And if you bought an option, I'm going to make it up. If you got the option here, let's say it cost you $7 right there. Right, that was $7. By the time the option gets down here, it's at $11. I'm not going to put pennies in. I'm just making it all up, right? By the time the option gets back up here, it's at $9.50. The option gets back down here, which is about where it was. It's at $10. Right, we get back up here, and it's at 8.25. Right, and you're like, wait, now we get back up here, and it's at 6. You're like, wait, what in the world's happening there? Right? The market maker is managing their inventory very closely. Right? The big move happened in here. Why did it go from 7 to 11 and back to 9.50 with a small move up like that? That is because as the stock is dropping, you're getting an increase in volatility. That increase in volatility is causing an increase in premium, mainly causing an increase in bid-ask spread. But we won't put that into the mix just yet. And I'm watching in this market condition that traders are actually getting their heads handed to them on short-term trades more often than they were. And that's a problem for any trader, right? This market condition has made it extremely complex because it's really easy to say, well, assuming that there was no support line there to take you out, the stock dropped, and how did I know that it was going to do this and then take back off again? You don't. But are there telltale signs of, is it okay to stick with the trade, and other ones that say it's time to go? Yeah. You get this strong bearish thrusting pattern, all solid bearish candles, and then we start having some bull. Big bearish candle, another bull. Couple of bearish candles, we break it. So are there some signals? Yes, there are. Are there other things or other trades you might want to consider? And the answer is yes. Okay. I am a big fan in any market condition. There's one for bullish and one for bearish, right? There is did I close that down? There is a trade diagonal spreads. I don't get into a lot of the trades like this here because it's too many steps to really teach effectively. Directional trade, break support, retest, fail, easy. One thing, one piece, it's all done, right? In a diagonal spread, you can have a tremendous premium for having the stock be able to, well, let me do it this way. So if we have XYZ, it's funny. I used to use that all the time, right? Nobody had XYZ symbol. Now Block, or what was Square, has changed their ticker symbol to XYZ, right? But if you have XYZ stock, let's just call it ABC, PFA, pluck from air, right? Pluck from air, okay? And pluck from air is trading at $78, okay? So if I go ahead and I could buy the stock at 78 and I could sell a higher covered call, let's say the $80 call, and I could take in, I don't know, $1. Again, I'm just making numbers up, okay? I take in $1 for it, right? And that's for this Friday's expiration. So what higher price stock for that? So I got to buy a lot of stocks. It's $78 per share. 10 shares is $780. 100 shares is $7,800. It gets expensive to do this trade. And I'm going to bring $100 back in premium. Okay. Instead of buying the stock, and this would be for this Friday, right? It would be Friday's expiration. Instead, I could go way out 3 to 4 months. Well, let's just say 3 to 6 months, right? I can go 3 to 6 months out. It's really 4. 3 is a little bit soon. So 4 to 6 months, right? We'll do 4 months. So I go 4 to 6 months, 120 days. I go 4 to 6 months out there. And I'm going to, instead of buying the stock, I'm going to buy to open, let's say the 72.5, 72.50 call. Right? And that 72.50 call is trading at, let's just say it's $10. Okay. So it's got some intrinsic value. It's got $5.50 of intrinsic. It's got $4.50 of time. Life is good. Okay. I don't think it's going to let me open a calculator here. Let me see. Yeah, it won't let me open my calculator right now. But if we look at, let me just write the numbers down that I just used. So we look at 78 and 1, and we look at 10 and 1. Okay, so I'm going to have to take it off of here. So, yep, calendar pops up there now. So cash in my pocket is $1 divided by $78 of what I buy the stock for. That's a 0.013, we'll call it. 0.013% rate of return. So 10%, 1/10 of 1%, right, is what we're getting there for rate of return. If I look at cash in my pocket of $1 and I spent $10, that gives me a 10% rate of return, right? Much better rate of return. I like the idea behind trading positions that give you higher rates of return with lower risk. And this is, now, is this going to give you the rate of return that you're going to get on a directional call or put? Absolutely not. No. If I can get 6 or 8% a week, 5% a week, I'm tickled pink. That's 5% is 20% for the month. You realize I said before the entire S&P is up 12% for the year. I'm talking about 20% for the month. And are there less aggressive trades you could do? Yes, you could turn this into a covered call instead, or you could turn it into a naked put instead. Cash flow positions are the bomb as far as I'm concerned. That is where the rubber meets the road. And I say it all the time. I wish when I first got started, my mentor, Vaskin, would have insisted that I did cash flow strategies, particularly for me, covered call strategies in my IRA account. Had I done those strategies, I would have had one more zero in my account by now than I do now. Because they're consistent, have high probabilities of success, love the strategies, love them to death. Jennifer, can you, I'm sorry, Andrew, can you see if you can help Jennifer out there? Okay. So for me, I love cash flow strategy. Guys, that's what Tripp is teaching in his classes, by the way, is cash flow. It's just ironic that this was the topic I chose for this week, right? His cash flow dominance training is just about that. And I may like diagonals. You may like iron condors. Someone else may like naked puts. Someone else may like covered calls. Someone else may like, oh my God, the Wheel of Fortune. Love that strategy, right? I'm a big fan of anything with cash flow. Anything to do with cash flow. Yeah, there you go. Andrew just dropped in the cash flow dominance again there, guys, so you can grab that. All right. So for me, if you are having problems with your current directional trades, maybe consider backing away less short term, like in and out today, and look at more of the cash flow stuff that is this week. It's not today, it happens for this week. All right. Okay, your stock picks. What candidates do y'all want me to look at? Drop those in. Let me see what you want. Let me go ahead and go up to all symbols just to make my life a little bit easier. Let's get back over to a daily chart. It's a 5-minute. Okay. Beautiful. All right, SPY. All right, fib is fine on SPY. We're sitting right down near that 600 level. 598.68 is the next support level we've got down there. Nothing down below that until the 586. Right now, get me above the 604, retest and bounce, Brenda, or drop below this 598.68, retest and fail. That puts me in a nice bearish setup with 586 as support. Let's see, 86. 12. Do I need a fib it? I don't think so. No, we don't need a fib it. Okay, beautiful. Qs. Q. Oh, didn't see it change. It's because it didn't. What happened? Why is it back on SPY? That was weird. Okay. Don't know. Don't know. So right now on the NASDAQ, on the Qs, we're sitting at a neutral bias or rank of 3. We're in the middle of nowhere. I really like the fail off of the 528.61 or the bounce off the 522 level. Those to me are our best opportunity is right there. Okay. Then we've got a couple people asking for Amazon. Amazing Amazon. Right. They've given quite a bit back over the last couple of weeks. They've not bounced as some of the others had. Right. We're in a bearish bias right now. Break the 214 retest and fail on 210 is support. If you're aggressive and you want to take the bounce, 218 and 3/4 is resistance, but I would take that as a small trade. Take it as an aggressive entry, which means less contracts in the trade. I would not do a full allotment there. Next, we've got Meta. All right, same scenario. Meta is one of those top 7 companies, by the way, in the S&P. We're looking at fail off of the 628.71, and we're looking at 664.73. There's a great opportunity, and it did it today. It did it today. If you caught, it gapped up, failed, retested, and dropped. I did not catch it. I did not catch that setup. We went from that 683 all the way down to 665. Great move in just a handful of candles. Right? And there was the candle change. There's the difference. Right? Wonderful setup. Come on. All right. Next is Netflix. So Netflix can go either direction. If it breaks the 1,000, 972 is support. If it breaks the 1008 level, retest and bounce. You got to watch that 1018. There is an 8 moving average there. Just tighten up on your trailing stop. But I like this in either direction, but I would prefer the downside trade. Let's see. Intel. Kevin saying as a day trade. Yeah, it shows you how much I look at Intel these days. And nothing drawn on it. Investment club I had, we owned a hefty portion of this many years ago of Intel. All right. So we're in the middle of nowhere. Get up. I needed to get above the 25.84. And if it does, $28, get above, retest and bounce, $28 next resistance. I don't like the downside. We're in the middle of nowhere. And until we get down below that 23, I don't want to pick something for there. So PLTR. Right. Just another punishing day for them. All right. That 101.39 on Friday. Today they're at 93. All right. So, I mean, it's just brutal what they're going through. They were $125 stock. They're at 92 right now. 93. But I can trade this one as a switchback in either direction. So based on market conditions, move up, retest, and fail, or break above, retest and bounce. Take the trade on the bounce or take the trade off the fail. All right, hope that helps, Kevin. Let's see how much time we got left. Dell. Oh, I got my drawn tools on. Okay. So, Karen, my biggest problem is the 21 moving average down here at 113. Right? And if I wait for it to get past there, it's moved too much already. Oh, earnings are coming up, it looks like. Check the data, always check, never confirm, never rely on what's on any one platform. Make sure it's an earnings company that's telling you that. Yeah, I'm just the upside I'm much better with, but you got to watch the earnings coming up there. And then there's Big Airplane Karen asked about also. Kind of lost hope on Boeing. It's just died. And it's got nothing. Let's see, 181 and 199. 81. 18 points. And yeah, we need to fit it there. Let's put in negative 136. Okay, let's go back in now. So it does give us a switchback trade on it, Karen. Either direction on Boeing, right? So break above. Whoop, that's not what I wanted. Why did you change my tool? Break above, retest, and bounce. Take the entry there. On the downside, fail, retest, and drop. So 181 down to 173 and a half is support, or up to 190 and a quarter is resistance. I'd probably be at 189 on the upside and 175 on the downside. So a little bit less room to the downside there. All right, so I hope that helps. Last one, CrowdStrike. Yeah, I know they're old, Jim, on Boeing, but I don't have anything new to really draw off of. CrowdStrike, we're going to look at this evening in Pop about redrawing these. All right. Yeah, you too, Brenda. Happy trading you as well. So right now, we're sitting right at the 399. We could bounce up to 409 or fail down to 488. I'm sorry, 388. I'm good with either one of them, but I would prefer the downside trade, especially since we've done it before. And notice it bounced off that 55, which gave us that, quarter of an inch thickness of extra wood there, along with the 388.62 level. So excellent. Good training, guys. I'm very happy with what we had go on today. So good candidates, good participation. I do appreciate it. We put a couple of links in for you to click on. I'm going to leave the room open a couple of minutes. You all have a great rest of your day. God bless, and I'll see you at our next update, folks. Make sure you get registered for Tripp's class. We'll see you soon.